Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1% for the week. Dow Jones was down even more, down 2.3%. On the upside, oil was up 4.3%. It is now up 21% year to date. Oil was up in the back of concerns over intensifying tensions in the Middle East. Interesting enough, when oil was spiking the highest on Wednesday, Thursday is when the S&P 500 sold off the most. There were definitely concerns also from the stock market around comments from Federal Reserve members, kind of dampening expectations of when they will lower interest rates if inflation doesn't continue to calm down. There was also worries about the Friday payrolls number, which actually came up on Friday much stronger than expected. In March, there was 303,000 new jobs. The expectation was closer to 200,000. Unemployment rate also ticked down slightly to 3.8%. It is the 26th consecutive month where we have unemployment rate below 4%. And also average hourly earnings, which give us a sense of wage growth, rose 4.1% year over year. That's lower than the 4.3% we saw in February, right? So slower wage growth is good news for inflation expectations. So the interesting thing is that Friday markets actually rallied, stock markets rallied in the back of this strong payrolls number, right? So I think there was like some fears ahead of it, stronger than expected. It was a reminder that the economy will likely continue in its current trajectory if employment holds up, right? And employment is holding up fairly steady. The other interesting data point that's contradictory to maybe that the economy is not doing as well is that the ISM manufacturing number came out in expansion territory. That's the first time as an expansion territory in 18 months, right? For all intended purposes, the manufacturing sector was in a recession in the US for a number of quarters. So if anything, the area that was doing the worst is starting to show signs of life. At the same time, the ISM service report on Wednesday came in a little bit worse than expected, but service sector is what's driving wage growth the most. So I think that to a certain extent kind of helps the picture of wage growth continue to decelerate. So that's the story for this week. Next week, we have CPI inflation data as well as FOMC minutes from the March meeting. That will give us a sense of how the Federal Reserve is currently thinking about interest rates trajectory in the coming months. That is it for this week. Stay tuned for next week.